Greetings, members, one and all of the Salivation Nation. A study of the gold to silver ratio dating back to 1693. Let's explore. Yes, I found this website called Long-Term Trends. Found it quite fascinating to kind of take a look at what the gold to silver ratio has been for quite some time. I've been seeing some comments on some of my videos about how the gold to silver ratio should be at 15 to 1. Some have even said it should be at 1 to 1. But in reality, we live in different times, and though we are certainly way above the normal gold to silver ratio, it does not necessarily mean that it's going to get back to any kind of numbers that some think it should be. In fact, I'm of the mind that we may not even get back into what I had once considered a sense of a normal gold to silver ratio. So this video is about giving perspective and finding out and taking a look at, on a general sense, some of the reasons why the gold to silver ratio was the way it was and why it is the way it is now. And also why I think it's important, especially in terms of stacking and holding and where to put your money. Should it be in gold? Should it be in silver? Should it be a combination of both? So let's take a look at this here. This is a chart that shows it here for the last 100 years. And we can see that, since about 1920, about 100 years ago, the gold to silver ratio was about 20 to 1. And we can see that it has kind of increased pretty much ever since then. But before we got taken off the gold standard completely, in April and June of 1968, it was down to like 16 to 1. And then once we got off that gold standard, well, we saw it start to increase. There was only one time there at around 1980 where it had squeezed back down to about 20 to 1. And that was the only time where it got to the period before when the price of, when it was fixed. The ratio was fixed. And the only reason why it got down that low is because of what happened with the Hunt brothers and that big run up on gold and silver, especially silver. And then we saw where it had gone way up in 1991 and got up very, very high here, and 94.83 to 1, which we had not seen since 1940 when it got up to 99.73. Here we can see these two peaks here where it got very, very close. Of course, these are kind of averages out, but it did get up to that point there. But really, ever since that 1991, it has kind of averaged out. And that average really since then has been kind of right around the 50 to 60 mark. In fact, we saw the range go anywhere between the high 70s down into the low 50s for the most part. But we saw one other pretty big dip in the gold to silver ratio in 2011. Yes, that's right. And this chart here shows 40 to 1, but I believe it actually got down very briefly to about 32 to 1. And that's the lowest we've seen it in a long time. Really, that's the lowest we've seen it since about 1984 or so, or a little bit before that. And then ever since then, it's been steadily climbing up ever since, except for in 2016 when we saw another kind of a run up on gold and especially silver over $21 an ounce. But ever since then, it has been climbing up steadily to over 100. In fact, it did reach up. Now this is kind of an average here. It shows 104.72. It did get up to 126, I believe. But you have to, again, this is a kind of a smoothed curve for the most part. But by and large, averaging out there at 104, over 100. It is now back down here below 100, but not by a whole lot there. And so that is sort of the context of where we are at since then, since about the last kind of the peak there in 1991, and we're only looking at 100 years. If we narrow this down to 50 years, you can kind of still see here where things are, and we can see some of these numbers, and they kind of becomes a little bit more detailed. If we look at the 100 year, we'll just give us a more accurate portrayal here, but again, still smoothed out. We can see that high was at 123.34, but I believe it did get up to 126. And right now we're resting, as of the 7th of July at 97.34, still very, very high, and nowhere near kind of the high average we have been seeing over the last year, which is in the high 80s. And but nonetheless, if we look back 10 years ago, I think this is quite telling. Here we see that 33 to 1 back when gold and silver spiked, and silver especially spiked up to $50 an ounce. And we can see there that 33, and actually I think it was 32 when you look at it very close. But nonetheless, it is fascinating to see where that is and how it has pretty much been on an upwards trend ever since then. And so if you take this low and this high and average it out, well, you just look at the chart. I think that really gives you the best notion here to give you an idea that really it's around the low 70s, high 60s perhaps, is where it's been averaging over the last 10 years. So let's just say 62 or 63, between the high 50s and low to medium 60s would probably be a reasonable average for the last 10 years. But again, trending upwards. Again, we go back to 50 years and now, but let's go back and see what historically it has been doing all the way. Let's go back here and take a look. And before we do that, we can see, let's take a look at some of the interpretation of this. This chart, there's the little blurb says that the gold to silver ratio represents the number of silver ounces it takes to buy a single ounce of gold. Historically speaking, the gold-silver ratio has rested somewhere between 15 and 10 to 1 as through the course of history, reflecting the average supply of each metal, but also what was fixed as well. They don't mention that here. There were times throughout the history of money where the ratio was even lower. China once had a 4-to-1 ratio, and the ancient Egyptians even had a 1-to-1 ratio at one point. And that is true, especially in those areas, especially in the Middle East, where silver was very rare. It was not found. But in other places, like especially when you look at the formation of the United Kingdoms of England, silver was traded a lot and used as barter, and used as a bounty for exchanges between the Northmen, the Vikings, and the kingdoms of Mercia, Northumbria, East Anglia, West, and many different kingdoms out there, Mercia. So nonetheless, there is a lot going on by there, but you can see here, if we look back here of what we had going back, we're going to look back at early history here and see where the ratio had been relatively fixed here, where its movement is very negligible between the prices dating far back here and its movement and this ratio here. 14, the high here, and in early 1900s was 16.25, but generally it has been as such. Let's see, let's go back here to the time before the United States was a nation, and we saw trading on the English standard here, 15, 1492, 15, just over 15, very high, dating all the way back here to 16 and 93. In fact, let's see here. You can see these curves became very fixed points. It's not fluid because these were set and pretty much standardized by the kingdoms of the day, basically the world average probably. So each nation probably had some sort of fixed rate, and this is averaging out and how it is shifted and averaged between at different times as we go back here. The earliest time we have is the end of 1693, where it's a 14.83, and we can see there it is. Fascinating indeed. And so that is a look at where that lies. Now let's go over here and take a look what I thought was quite a fascinating chart that SD Bullion had done. So we can kind of take a deeper dive into this from the gold-silver ratio timeline. Number of silver ounces worth 1 ounce of gold from 1862 to 2020. In 1862, by the way, you saw both metals go up in price, and that was kind of the interesting point to start here. But we can see here what happened. First of all, in 1792, we had the Coinage Act, which set a bimetallic silver-gold standard. And then we have the gold rush, the first influx of supply into gold there. Then in 1873, which is shown right here, we had the crime of 73, which ended bimetallism in the United States, placing the nation firmly on a de facto gold standard. And yes, indeed. And that was when, the election of 1896, I believe, he had William Jennings Bryan, the populist candidate, his Cross of Gold speech, wanting to go back into silver standard as well. Silver as well as a gold standard. Then in 1900, the Gold Standard Act officially ends bimetallism. So there you see what it looked like, and you can see that it had kind of increased from there, and fascinating indeed. And then in 1933, we had a 4-day bank holiday as declared to stop the hoarding of gold and silver. And of course, we had the confiscation or the executive order that made it illegal to own gold. And then in 1944, we had the Bretton Woods Agreement. And you can see how the gold to silver ratio had increased. Fascinating here. We can see that time was 100. Over 100 to 1. We saw that in the other graph. And we can see here that finally in 1971, Nixon ends convertibility of U.S. dollars to gold that was supposed to be temporary. Then in 1980, we saw silver hit an all-time high just below $50 an ounce. You can see where it has squashed back down below 50, 41 or so. Then in 1986, the Mint introduces the American Eagle gold coin and American Eagle silver coin, the number one bullion coins in worldwide sales and volumes. So you can see that there, and you can see how things have moved through. In 1991, we covered those highs. Very interesting radiograph here, and then we can see here as we now reached the highest level in history between the gold and silver ratio. And now that could obviously come way back down again. But will it ever normalize? Look how high it's been. I think this chart really is telling to see how high it's been, especially through here more consistently than over here. Nonetheless, very interesting indeed. And so yeah, this is where things are now. They've included in here the silver, gold, and silver eagles ratio on eBay, the sales on eBay. So very interesting to see how those sales reflect that ratio for sales, which is kind of alludes to the 4 different gold silver ratios that I talked about in a previous video, that there's actually 4 gold to silver ratios. I'll link to that at the end of this video in the end screen. But fascinating indeed, and just goes to show you where that is, and keep in mind how it was fixed for so long in history. When you look at this throughout the course of history, you see that artificial number here, and what we're seeing now is a much more natural view, although obviously people make reference to manipulation playing a part. We've discussed that ad nauseum on this channel, but nonetheless, there it is. And I believe, especially since 1900, we have seen a massive increase in production of gold and silver products and out there, because there's been more mining going on since 1900 than any time in history. And I think that's having a great effect, especially the amount of silver that's been mined. They still say that it comes out of the ground at around 8 or 10 to 1. And that very well could be true. But nonetheless, the way it trades is a different matter, and the uses and the way it's seen out there. But I do believe it's important because of that very case. People view the metals differently now. silver has a dual role. The duality of silver is quite fascinating indeed, and the markets are seeing it as such, as a more of a commodity than as a hedge or as a monetary metal. That does not mean that I don't feel it's a monetary metal. I believe it is a monetary metal. I look at it as a hibernating money. It's asleep, but it has been used as money for thousands of years. No mistake, absolutely undeniable there. And I believe that it's just kind of asleep right now. Gold is money as well. It's a tier one asset, and it is really traded even between central banks and the like, and with swaps and the things as such. Silver is not, but nonetheless, silver is utilized, and I believe it could really become set some sort of standard again in due course. If they do it the right way, we could have a bimetallic standard again one day. We don't know, which is why I call it hibernating money. But nonetheless, that is a sort of a deeper look into here. Let's take a look at the actual prices of the metals. Yeah, you can see here the amazing difference if you take a look back throughout history, how close they were throughout history here, back when earliest records were kind of taking place before the 1700s. Look where gold was fixed, and the silver was more floating there. And so look at that. Very rarely did it go above $20, because that's when, especially when the $20 gold eagle was out, and there is where it's a 2067, 2073. Then we had the Civil War. We can see there what was going on during that time, the volatility, and saw the separation, and silver took a dive. It took a pretty big hit, 60. Look at these. Look at this price action here for silver compared to gold. And then we saw the widening here after 19. We saw the widening here between the metals. Pretty much, most part here, they kind of stuck together here in the grand scheme of things. But let's narrow this down. We can see how they've widened. The gap has widened for quite some time between these prices, but now it's wider than ever. The divergence between the two metals is just, and this is really a tale of where we are at these days between gold and silver. But keep in mind, looking out through the course of history, the price structure here, we can see that though silver is kind of depressed here between the movement between gold, still far above where it was in years before 2008, before 2008 here. And that is the kind of thing to think about in silver. So that is why we need to think about it in a sort of a different way, or be prepared to think about it in a different way at this point. Does that mean it can't creep back up here like this and catch up to gold? No, it could. And I always leave open that possibility. And I hope the possibility is that it will stick closer to gold like it had historically. But this is the widest gap we've seen in history, and it's been trending that way for quite a while here. So we're at a unique point in history, I believe, because of that. And this chart is very, very telling to help further tell the tale of the gold to silver ratio. So there you have it. I hope you found this video helpful. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate. That's right, caress that like button, comment, share this video, and subscribe.